Hi, I'm here to tell you a little bit about IR35 and the changes that are on their way. So what is IR35? IR35 is a word used to describe two sets of tax legislation that are designed to combat tax avoidance by workers and the firms hiring them, who are supplying their services to clients via an intermediary such as a limited company, but who would be an employee if the intermediary was not used. Such workers are called deemed employees by HMRC. If caught by IR35, they have to pay income tax and national insurance contributions as if they were employed. The financial impact of IR35 is significant. It can reduce the worker's net income by up to 25%, costing the typical limited company contractor thousands of pounds in additional income tax and NICs. Despite having been in force since April 2000, IR35 is heavily criticised by tax experts and the business community for being poorly conceived, badly implemented by HMRC and causing unnecessary costs and hardships for genuine small businesses. The new Off-Payroll working rules have been introduced mainly because HMRC believe there is significant non-compliance. By pushing the financial risk of non-compliance from the personal service company, or PSC, to the end user, they know that this will change behaviours. The operation of these rules in the public sector where they've already been applied has resulted in significant changes to the way PSCs are used. If you are a genuine contractor, freelancer, interim or consultant who is in business on your own account, you should have nothing to fear from IR35. This is so long as you take the time to understand how the legislation works and apply best practice to ensure that it does not apply to you, and have a defence prepared if investigated by HMRC. IR35 was introduced to tackle the problem of deemed employment. This is where organisations engage workers through an intermediary rather than on an employment contract, so they become deemed or disguised employees. This can save the engaging organisation a significant amount of cash, as they no longer have to pay employers' NICs of 13.8% or the apprenticeship levy of 0.5%. And it also means that they do not have to offer any employment rights or benefits. Importantly, the worker also enjoys the benefits of operating through a corporate structure. A common example of so-called abuse of the system was the Friday to Monday phenomenon. This was where an employee leaves employment with their employer on a Friday only to return to the same role in the same office on the Monday, but engaged as a contractor or consultant trading through a personal services company and paying much less tax. IR35 should have a genuine role to play in defending both workers' rights from unscrupulous employers and the exchequer from lost tax yield. Unfortunately, the legislation in its original and current forms falls well short of those aims. Let's look at how IR35 works and the tests of employment. Because IR35 essentially seeks to turn a legitimate one-person small business into being an employee, it's underpinned by employment legislation and IR35 case law, and as a result, the tests of employment that have evolved over decades are applied. The key IR35 case law dates back to 1968 in a seminal employment law case, Ready Mixed Concrete South East Limited versus the Minister for Pensions. More recent cases, particularly those ruled on since IR35 was introduced, can also apply. Essentially, an HMRC inspector will attempt to disregard the written contract in force between the worker and their client and use the actual nature of the working relationship to create a notional contract. An inspector or tribunal judge will use this notional or hypothetical contract to determine whether the contract is one of employment when IR35 applies, or one for business-to-business services where IR35 does not apply. Not surprisingly, an expert knowledge of employment law is required to fully interpret these tests, and neither those independent professionals being investigated, nor HMRC's tax inspectors, nor hiring clients can possibly be expected to become experts in decades of employment status case law. Determining whether you are caught by IR35 is complex, and ideally you should seek expert advice. Now on to control, substitution and the snappily titled mutuality of obligation. In short, IR35 involves applying three main principles to determine employment status from the ready-mixed concrete case. These are known as the principal tests of employment. Control. What degree of control does the client have over what, how, when and where the worker completes the work? Substitution. Is personal service by the worker required, or can the worker send a substitute in their place? And mutuality of obligation. This is a concept where the employer is obliged to offer work and the worker is obligated to accept it. So, other factors then taken into account to determine whether you're caught by IR35, including the contract type, whether you're taking on a financial risk, the provision of equipment, if you are part and parcel of the engager's organisation, and being in business on your own account. All of this evidence is taken into account, and if the balance of probabilities is that the worker is an employee, then IR35 applies. So for example, if a worker genuinely has an unfettered right to send a substitute in their place, personal service is not required and IR35 cannot possibly apply. But relying on that alone can be fraught with danger. The reforms from the 6th of April 2021 will place the burden for assessing whether IR35 applies onto the end user of the worker's services for all payments by medium and large businesses. This change will significantly impact the construction sector in particular, where the use of arrangements potentially caught by IR35 is common. It has the added complexity of dealing with the interaction of the CIS scheme. These changes were originally due to come in from the 6th of April 2020, but a deferral was announced to 6th of April 2021 in response to the spread of coronavirus. What will the IR35 rules change? In truth, the IR35 rules themselves will be essentially the same as they are now. It is the new Off-Payroll working rules that are modifying the way in which IR35 compliance operates for those PSCs engaged by medium and large end users. Under the reforms, any business which is not a small company will be required to undertake an employment status assessment in respect of any of their contractors operating through their own intermediary, whether they work directly with the business or via an agency. Where it is concluded by the end user that IR35 applies, the fee payer, which may be the end user themselves or a recruitment agency or other third party paying the intermediary, will become responsible for accounting for and paying the related tax and NIC, including the additional cost of employers' NIC to HMRC. The government have confirmed that they intend to use the definition in the Companies Act 2006 to determine whether a business is a small company. Under current legislation, a small business is one that has two or more of the following features: a turnover of up to 10.2 million, a balance sheet value of up to 5.1 million, or up to 50 employees. So a small company has at least two of these and therefore escapes the new rules. The rules can, however, be more complex than this, where the business is a subsidiary, part of a group, or associated with another company. And unincorporated entities such as partnerships will be subject to a simplified test based on whether their turnover for the calendar year exceeds 10.2 million. The new rules apply whether worker personally performs or is under an obligation to personally perform services for a business and certain conditions of liability are met. They apply to medium and large businesses as well as the public sector, who are the end users of the workers' services. Fee payers, if different regardless of size, for example a recruitment agency or small company providing labour, and to anyone else regardless of size, otherwise involved in the middle of the labour chain for such a contract. Where a construction business fully outsources a whole service, and there are no provisions for a worker to personally provide services to the company outsourcing the arrangements, then the recipient of that service will not have any obligations under the new rules. In this situation, the company taking on the outsourcing contract may be the end user for the purposes of this legislation. Where the end user of the worker's services is a small business, the responsibility for assessing the arrangements and applying IR35 will remain with the contractor's intermediary. The government have confirmed that this will be the case even if the worker is supplied via a recruitment business. In this situation, the fee payer, such as the recruitment business, will not have any additional obligations other than the existing requirement to submit a quarterly return to HMRC with details of all workers placed with clients where they do not operate pay-as-you-earn. So what are the cost implications for medium and large end users? Contractors who are deemed to fall under IR35 will attract 13.8% employers' NICs, pension contributions, paid holiday entitlement. They may well seek to increase their hourly rate to compensate for the additional taxes that they suffer. There are online tools available to help you to calculate the financial impact on individual contracts, and we can point you in the right direction for these. Just to be clear, the pension costs and holiday entitlement do not fall into the IR35 off-payroll rules, but there have been cases where those who have fallen under IR35 have challenged their deemed employer to provide the benefits associated with being an employee. So what should businesses be doing now to prepare for IR35? Medium and large businesses should start to prepare for the proposed new rules now, and should not underestimate the amount of work required to be sufficiently prepared for the change. As a starting point, we would suggest that businesses should assess the number of workers currently being used who are expected to continue beyond the 5th of April 2021 who operate via off-payroll arrangements such as PSCs, who could potentially be caught by these rules. Remember that this should include workers operating through PSCs sourced via intermediaries such as recruitment agencies, as well as those engaged directly. Discuss internally whether the impact of coronavirus will be likely to lead to more need for the flexibility of off-payroll workers than was originally envisaged. Undertake due diligence on their worker supply chain, as transfer of debt provisions apply in the chain under the new legislation transferring pay-as-you-earn and NIC liabilities where there has been non-compliance in the chain. Assess the direct and indirect financial impact of the proposed change. For example, new processes and systems will be required to determine if the rules apply to an arrangement and to manage the status disputes. Where arrangements are caught, the fee payer will need to account for and pay the related tax and NIC, including the additional cost of employer NIC. For construction businesses, consider the interaction with the CIS rules. And be particularly mindful of the potential additional costs when entering into new arrangements or when renewing existing contracts with workers now that will continue beyond April 2021. So how can we help? Our specialists have detailed knowledge of the proposed rules and practical experience of implementing the changes. We have a multidisciplinary team of experts who can provide advice and help you prepare for all aspects of the changes, including designing new processes and controls such as payroll, human resources, finance, data management and IT. We can run workshops and bespoke training. We can develop a tailored approach to status determinations and employment status for your business, and changes to your budgeting, compliance, contracts and key stakeholder communications. So we're here to help, and here are our contact details. Please don't leave it too late. The application of these rules is closer than you think. Thank you.